Hello, welcome. So today I will discuss on the Procter Gamble company, which is PG. So what is going on with PG? So it is in 1 day period $160.28, which is $2.90 down from yesterday, which is 1.78% lower. So in 1 day period it's in bad shape. What about 5 days period? It is again in a bad shape. It was 5 days ago. It was $164.65. So today it is $160.28, which is like $4 less. So what about 1 month period? In 1 month period it is like in sideways, like it just went up and again it is in the same position, almost the same position. So it is not in convincingly in uptrend or not in downtrend as well. So what about 6 months period? It is in down position. Like 6 months ago it was $171.06, which is like $11 higher. So it is in down, it is in bad shape in 6 months period. So what about one year? So in 1 year it is down, a little bit down, not a great deal down, which is $166.41 to $160.28, like it is $6 less than 1 year ago. So what about 5 years? So 5 years ago it was $118.92, and today it is $160.28 on June 13, 2025. So on today's date it is in uptrend if you consider 5 years period, but rest of the period say it is not in uptrend, rather it is in bad shape, it is in downtrend. So why is that? Why is a company like PG going down in shorter term periods? Okay, so let's go a little deeper. So what about it is what about the trend? So YTD return is bad shape, like it is in 3% lower in YTD, which is 1.62% higher in S&P 500. So what about 1 year? In 1 year period it is 1.33% lower. So S&P 500 rose by 10%. So it is in bad shape in 1 year period. What about 5 year period? In 5 year period also it has given 56.79% return, while S&P 500 gave 96.53% return. So in 5 year period also PG is in bad shape. So it is actually in a bad shape, I have to say. So what about its financials? So let's see what is here its financial. So profit margin is 18.46%, and return on equity TTM is 30.29%, which is good. What about diluted EPS TTM? So that is 6.30. So what about trailing P is 25.90, while forward P is 23.31. So it is not a big deal of forward P, right? It is a small forward P. It is like good P ratio. You may consider why the price is down, because this stock is a defensive industry stock. This is a consumer staple industry stock. This kind of industry or defensive industry gives lower return, not higher return. These kinds of stocks have very low P ratio. Industry P might be 19 or 20, while it is in 23.31, which is higher. So it should lag behind its competitors or rivals, right? So let's go a little deeper with some reading. Oh, before that, let us consider analyst price expectations. So what analysts are thinking, the stock should be $170.88 according to average analyst estimate. Okay, so high estimates are $190 and low estimates are $140, but the stock is currently $160.28. So if you compare with the average analyst estimate, the stock is undervalued. It should go up by $12 or more. So this is the situation with the stock. But this stock is not something like explosive stock, because this is a consumer staple. So consumer staple doesn't give like exponential returns, like too much of a return. No, this kinds of stocks do not give something like that. So let's go to the article about it and read a little bit about it so that we have more perspective. So I have the article here, Procter and Gamble PG declines more than market, some information for investors. So what's going on? So Procter and Gamble closed the most recent trading day at 160.28, moving 1.78% negative from the previous trading session. This change lagged the S&P 500's 1.13% loss on the day. So it is in bad shape. On the other hand, the Dow registered a loss of 1.79% and the technology-centric Nasdaq decreased by 1.3%. So whatever you consider, it is in bad shape for today. It went down by 1.78%, which is down almost 2%. So the world's largest consumer products makers shares have seen an increase of only 0.47% over the last month, not keeping up with the consumer staple sector's gain of 3.1% and the S&P 500's gain of 3.55%. So it is lagging behind, right? It's only 0.47% return over the last month, which is quite a bit low. So the investment community will be closely monitoring the performance of Procter & Gamble in its forthcoming earnings report. In that report, analysts expect Procter & Gamble to post earnings of 1.43 per share. This would mark year-over-year growth of 2.14%. So the quarterly report will be 1.43 per share, which is this is the analyst's expectations, right? So if the report beats the analyst expectation, then maybe it will be a good sign and the stock may go up. Okay, and for the full year, the Zacks consensus estimates project earnings of $6.78 per share and a revenue of $84.24 billion, demonstrating changes of 2.88% and 0.24% respectively from the preceding year. So this is the Zacks estimate. So of full year, this is quarterly. So 1.43, which is the analyst's expectation. Average analysts expect that the stock will give a quarterly EPS of 1.43. So this is the situation with Procter & Gamble. So investors will be closely monitoring whether it beats the analyst's expectations, so that there will be a price pressure, upward price pressure, and the price may go up to $180, $190 or so in the upcoming year, maybe. But if the analysts' expectations are not fulfilled, then it may go down by $10 to $12, $15 or $20. So it depends. It depends upon the market situation and how the investors perceive that information, and also the overall report. Okay, so that is all for today. So keep watching for more and more updates, so you can have a better perspective on investment. So have a good day. Bye.